Welcome to NDTV and BQ Prime special segment, Let's Talk Business. I'm Parmeshwar Bava, and this is where you can catch the top news stories from the world of business and finance. Let's begin with the markets. They drifted higher to end the highest in over a month, while non-banking financial companies, PSU banks and metals gained. FMCG and realty stocks were under pressure. But the Sensex closed up 556 points at 61,749, while the Nifty gained 166 points, shutting shop at 18,255. The rupee strengthened against the US dollar, appreciating 3 paise to close at 81.80. My colleague Alex Matthew with the wrap of all the market action. Alex, over to you.
Right. So the Indian equity markets ending up being a bit of an exception to the rule today after the Fed announced its decision after its latest meeting, that 25 basis points hike coming in as expected. But like I was saying, the benchmark index for India, that is the Nifty 50, gained ground today once again, ended with gains of over 0.9%. And we've now seen gains in 7 out of the last 8 sessions. So from the beginning of last week, we've seen gains of over 600 points for the Nifty 50, and that's saying quite something. Focusing in on the broader markets as well, you saw gains there too. So across the board, you saw gains in the session today. Pretty much all of the sectors gained ground. The two that underperformed were realty and FMCG, but the ones that were in pole position were, of course, the banking index, that is the Nifty Bank, as well as several of the financial names, and also the metal index, which gained quite a bit of ground in trade today. A few of the stocks that you would want to focus on from the large cap space, you had the likes of HDFC and HDFC Bank that did quite well. HDFC on the back of its results. You had SBI that also gained. The entire PSU banking pack was higher in trade today. Reliance Industries was a name that you had to watch out for, gained about 1% or more than 1% and lent quite a bit of strength to the benchmark. And then you had the likes of the oil marketing companies as well as a few more like Asian Paints that have quite a bit of their raw materials tied to crude oil. And as you know, crude oil prices have been on the move downwards. They're trading at around $73 to the barrel for Brent crude. Going forward, we continue to focus on earnings. That remains front and center. And of course, we have the likes of Marico and Britannia that will report their earnings tomorrow. Those are the ones to watch.
Right, as Alex briefly mentioned, India's largest mortgage lender, Housing Development Finance Corporation Limited, reported a bigger than expected 19.6% rise in the fourth quarter profit, boosted by strong demand for loans. HDFC reported a 19% jump in their net profit at 4,425 crore rupees. This is higher than the Bloomberg estimate of 3,870 crore rupees. The net interest income rises 15% on a yearly basis. The gross non-performing assets fell 31 basis points to 1.18% as opposed to 1.49% last quarter. Provisions, though, stood at 12,145 crore rupees. And oil prices recovered slightly today, but were unable to claw back the more than 9% decline in the last 3 days. Crude cracked on concerns that the global economy is heading toward recession. Demand concerns in major consumers also weighed on crude. Oil has retreated 14% this year, though, showing that OPEC Plus's decision to cut output isn't working yet. Even the Federal Reserve, hinting at a possible pause in its aggressive tightening campaign, failed to arrest crude's decline. Herald spoke to Azlin Ahmed to understand the impact on India. Here's what they said.
Okay, so right now, in the last month or so, we've seen that the imports of Russian crude into India, it's actually hit a record. I think it's about 1.6, 1.7 million barrels per day. So that's pretty high, right? Going forward, it could still increase, but the feel that we get is that India buys a lot of all this Russian crude on spot market, and what they have had to back out to get to take this Russian crude is that they've had to back out spot crude, and that includes crude from Nigeria, from US, from Egypt, from various countries. But Indian refiners are still buying Middle East crude on term, and at this point, it is still supply security, so they will probably not want to reduce term supplies to buy more Russian crude. So the feel we get is that we are almost at the peak. I think it's going to be a little bit hard for Indian refiners to boost Russian crude imports much higher than what they are doing now. So at this point, we think that the percentage of Russian crude in the overall China import basket, may not jump higher. Maybe a little bit, a few percentage increase, but not a huge jump, because yes, they would have to start cutting term Middle East. And I think that at this point, this is not something that the Indian refiners are willing to do, because there is still that security of supply that they are concerned about.
Let's also get you a quick update on Go First. The National Company Law Tribunal has reserved its order on Go First's plea, seeking interim moratorium to prevent the seizure of its 26 aircrafts. Go First has filed for bankruptcy and has sought moratorium to prevent lessors from taking possession of the planes. This was, however, opposed by the lessors. They have said that this would jeopardize their contractual obligation, adding that they want their aircrafts back. And a quick look at how Tata Steel is doing. Their fourth quarter revenue and net profit declined. Woes in Europe partly offset the rise in India. The company, however, managed to beat estimates for all metrics by a wide margin. European EBITDA was impacted due to higher expenses, which include bulk gas-related costs and higher employee costs at Tata Steel Netherlands. We spoke to Tata Steel's MD, TV Narendran, about the Q4 performance and how Europe remains a problem area. Here's what he said.
If you look at our overseas assets, the Southeast Asian assets, which are in Singapore and Thailand, were largely self-sufficient. They did not require any support from India. They took care of their own needs. So they were not really having an issue, or we didn't have an issue with the Southeast Asian assets. Of course, we got out of Nat Steel because we had a good offer. But if you look at Europe, again, we want to split it between Netherlands and UK. The Netherlands side has always been cash positive, EBITDA positive, never needed any support from India, and can stand on its own. That visibility was probably not there for everyone because we were always reporting Tata Steel Europe as a consolidated basis. We still are. But we've already, from a business point of view, split the business. Today we run Tata Steel Netherlands separate from Tata Steel UK and have done away in some sense with the corporate level of Tata Steel Europe. UK is where the challenge is because structurally it's a weaker asset. And we've done a lot of restructuring. When we acquired Chorus, UK was 10 million tons. Today it's 3 million tons. And a lot of it was done over the last 10, 12 years, or maybe since 2010. So today we have one site in major site in UK and downstream units. The downstream units are still in some sense in decent shape. But the upstream site in Port Talbot is old, needs some capital investment because the assets are coming to end of life. The cash flows of the business don't support those investments. And hence a conversation with the government that if there's support from the government, we can change to a different process route which makes greener steel. So that's a conversation going on with the government. That site cannot be sustained at the current level of operation. So there needs to be something which needs to be done.
Meanwhile, Titan reported healthy earnings for the March quarter. A favourable base and strong jewellery sales on account of the wedding season helped Titan post numbers in line with estimates. According to analysts, though, Titan's jewellery performance raised confidence in the company's FY24 growth. JP Morgan remains overweight on the stock with a price target of 3,000 rupees per share. It expects Titan's outperformance to sustain. Listen in to the managing director of Titan as he talks about the performance of the company and their road ahead.
Sales growth on a base of this order, the leverage, benefits are also there. So, but as always, and I keep saying this every time, that our focus remains sales growth and, less margin expansion, because we are overall delivering a very high return on capital because of our asset-light model to the business delivers a very high return on capital. And therefore, even if the margin stays in the same place or even dilutes a little bit, the ROCE is very high. So our focus is on sales growth first and try to maintain the profit margin.
And Adani Enterprises has announced results for the financial year and quarter ending March 31st, 2023. For FY23, the flagship company of the Adani Group has seen consolidated income jump as much as 96% and consolidated EBITDA jump as much as 112%. The consolidated EBITDA has witnessed this significant milestone on account of strong operational performance across business verticals of the company. But the consolidated profit also saw a massive spike of 218% at 2,473 crore rupees. Gautam Adani, the chairman of the Adani Group, says the past year's results, they represent indisputable evidence of the strength and resilience of the Adani Group's operational and financial performance.